Hello everyone, my name is Olusola olowoyeye from Nigeria, West Africa. The topic is impact of corporate governance on bank performance. I'll go quickly to the abstract. The objective of my paper is to explore the impact of corporate governance on continuous business operation and bank performance in Nigerian banking industry. The study is to explore the relationship between corporate governance and bank performance. I was able to run a regression analysis on 5-year financial data to be able to establish the kind of relationship that exists between corporate governance and bank performance. The study shows clearly that a relationship exists, meaning corporate governance have a direct relationship with bank performance. The keywords we are to look out for is corporate governance, bank performance, and type of what? Ownership. During the course of the study, I was able to establish that in terms of bank performance, we need to consider some specific ratios that measures performance, such as liquidity, loan loss ratio, activity mix, staff cost, market power, market to book value ratio, capital adequacy, then cost to income income ratio. I was able to look at the relationship between these ratios in terms of measuring bank performance compared to ownership structure, controlling interest, which is a measure to look at how corporate governance can be measured. And at the end of the finding, it was clear that a better corporate governance leads to better performance. The impact of my findings. The stakeholders, who are the regulators that guides the activities of organization in Nigeria, like Central Bank of Nigeria, Nigerian Deposit Insurance Corporation, and other stakeholders within the industry, make a lot of recommendations from time to time, grant guidelines that organization must follow in measuring what? Performance, and at the same time assessing corporate governance. Knowing fully well that corporate governance is a mechanism for directing and controlling an organization. An organization that is well governed will have good performance, while an organization that have corporate governance issue, the performance will be what? Will be low. The various stakeholders in the banking industry, including the depositor, customers, shareholder, should be involved in the various degrees and level to ensure that unethical and unsound practice that are risky in nature are curbed before they become what? Contagion on the entire system, resulting into grave what? Grave losses. My recommendations. The regulatory body in the financial system should constantly review the level of bank compliance with the corporate governance codes. In similar vein, various measures should be adopted by regulatory bodies to ensure compliance by banks as regards corporate governance codes. The bank that is in focus of this study should review their present corporate governance framework and their indices for bank performance as a starting point. Beyond adopting good corporate governance, the board and management of the bank should institute a culture where sound corporate governance measure is seen to be adopted as a way of life. getting everybody involved in the process to understand the need for corporate governance to be able to achieve bank-wide performance. The board and management of banks should review the various indices of bank performance in light of corporate governance framework, since the impact on what bank performance survivor is hinged on ability to manage the organization successfully. My conclusion: this study examined the impact of corporate governance on bank performance in Nigerian banking industry, and various recommendations as provided by regulatory bodies, board members, and management of banks should adopt and ensure survival and stability and sustain profitability within the banking industry. Thank you very much.